What's up, guys? Sam here, and I'll be doing the free video for Friday, February 16th, 2024. So I'm doing this one about an hour before the market closes. Surely no surprises will pop up that will derail the conversation that we're about to have. But let's go ahead and dive in. So we had been talking now for 2 weeks about the potential for a little bit more in the market, just a little bit more, and then we kind of were setting the date for today in terms of when things could potentially turn, right? Basically, OPEX for February. The reason being is, and take it or leave it, but this is the seasonality for the last 20 years or so, and you kind of run up into the middle of February, OPEX happens right at that peak, and you tend to have a little bit of a drawdown there into the middle of March, and then from there the rest of the year is usually pretty good. So we're entering that window now, and if that was just one data point, I wouldn't necessarily even bother talking to you about it. I'm actually not a huge fan of seasonality. I think you never step into the same river twice kind of thing. So assessing the market as it sits in front of you is probably the most important thing every time. But when you combine seasonality with some of the signals that we're seeing, it's just the risk to reward here is now completely lopsided. We talked about this in the last video, maybe 2 weeks ago now. It's called the bank heist, and I'll just repeat the analogy. But the analogy is, there's a bank. It has $100 million in the vault. You and I rob the bank. We can only carry 90 million, so we dump the 90 million into our truck. We get in. We're ready to drive off, and we look at each other and we go, should we go back for the last 10 million? And if we do, we risk getting caught. Now, we could drive away with 90 million and never get caught, or we could go back for that last 10 and potentially get caught. And that's kind of the situation that I see the market in right now, right? Can it go higher from here? Of course, right? Of course, it could just kind of keep going in perpetuity forever. But the risk to reward, if we start to assess the risk to reward here, it's just not completely favorable, at least based on the way that I look at things. And now you've actually reached kind of the climax, if you will, with the OPEX and the seasonality starting to kick in. So this candle as it sits is not the most bullish candle, right? That tends to be kind of a little bit of a topping candle, if nothing else. This also tends to be a little bit of a topping formation. Again, those points are not enough, but then you're going into next week and you do have an extreme reading on the high-low, which is not sustainable. This one is sustainable and this one is good and bullish, but the lower one is actually not sustainable. So at some point, that either needs to burn off with a pullback in time, meaning you trade sideways, or B, just a straight up pullback, and that would address that issue. Two things that I was noticing when we were doing the work with the premium video is that the interest rate here and the dollar, and VIX for that matter, are not necessarily lining up extremely well for the bulls here, right? So focusing really on this video and just in terms of risk to reward, right? Can the market go higher? Of course it can, but from a risk to reward point of view, is it really the most favorable spot here? Probably not. You have this kind of double bottom here on rates. This is TNX. This is the 10-year interest rate. A little bit of a breakout there as of this week. You do have positive thrust underneath it, and even though this chart doesn't look overly bullish to me, the indicator is actually saying that it is bullish. The daily chart is a little bit more neutral, but it still skews bullish, which is why the score is green. And you actually now have thrust to the upside here on the daily chart. So higher interest rates, and we've been getting some hot inflation numbers lately, are not necessarily going to be great for stocks, specifically tech, and even the Russell, which the Russell is what needs to participate next week, as that one hasn't actually done almost anything. Whereas the S&Ps and the Qs are 3 ATR up on the weekly time frame. So then we close out here with the dollar, and again, slim kind of odds here as I see it, because the dollar now has some upward pressure, consistent upward pressure on the daily, and really the strongest signal that I see, because the dollar is still just basically in a giant box here, but the strongest signal that I see is actually that it has thrust that is confirmed on the weekly time frame. And basically what that means is that if the dollar's signal is true, and I don't have a reason to doubt it at the moment, then interest rates are going to climb, and that typically is not read positively by the market. And then lastly, we look at VIX. And the reason I'm showing you these things, right, I'm showing you the S&P, interest rates, dollar, and VIX is just because I want you to notice how everything is kind of right on that edge of favorable, not favorable. So with the VIX signal here, now was I expecting that huge spike there on CPI? Not really, but we were looking for something to happen because as of last week, you had one bar there on the squeeze histogram against the grain, right? You had a yellow bar, and the last time that that happens, right, that gives you these spikes. So when you start to get the yellow bar, that gives you the spike. Yellow bar, spike. So now you have two yellow bars against the grain, and on the daily time frame, you now have thrust and a sneaky positive cross here on your oscillator. From a price structure point of view, you also just have a series of higher lows and a series of higher highs. So the VIX is one of those things that's kind of like it's a little bit like a rattlesnake, right? It'll kind of come out from nowhere. So you do want to be aware of these things before it happens. What you don't want to do is not buy insurance on your house and then try to buy insurance when the house is on fire, right? Because then at that point, it's going to be difficult to get insurance. So going into next week, what I told the folks in the premium video was a lot of these things, just the risk to reward to my eyes is not correct for me to be carrying on a bunch of swings. Now, that doesn't mean that I'm going to go out there and just short everything, but I do want to be nimble, and basically I want to be nimble for the next month. During this seasonality, I think that if we start to get an increase in volatility, one, that'll make day trading a lot more interesting because you'll get a lot more volatility intraday, and two, it's very difficult to carry swing positions and day trade and do both effectively, right? So one thing that I'm very much prioritizing going into next week is the mental capital to be free so that I can day trade more freely and not really care, right? If the market wants to drop 100, cool, I'll day trade it. If the market wants to pop 100, that's great too. I'll day trade it. But I don't see a good spot here for myself to be swing long going into next week. So that's my case. Feel free to disagree. Actually, I hope that you do disagree. I think that's actually extremely healthy. So if you happen to disagree, if you happen to see it differently, let us know down in the chat below. And I'm curious to know what you're looking at. So I'll come back next week and we'll check that out as well. All right, guys, well, that's my time. Have a great Friday, great weekend. It's a long week, so enjoy it. And before you go somewhere else on the YouTube, leave us a like. We'd certainly appreciate it, and it helps us with the algorithm. All right, guys, catch you next Friday. Cheers. Hey, traders. This is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.